What up, everybody? Welcome back to Trading Unfiltered. This is Tatted, and this is,
Sellers, as usual.
per usual, the one and only freaking long phone sniper king. Anyway, Merry Christmas to everybody. Merry belated, soon to be Happy New Year. Did you have a good Christmas, New Year?
Oh yeah, man, absolutely. How about you?
Wonderful. I know the New Year ain't here yet, but it's damn close, and it'll be here before we know it.
That's
But
right.
good to be back.
Oh yeah,
It's been a minute since we've done this. See if I can still remember how to do the old intro.
hit it.
Oh yeah, still got it. Still got it.
That's right.
All right. So today we had plans, right, to talk about Trade Anvil. We have been using them for a couple weeks, learning some ins and outs, but we are actually going to put that on hold because they actually have a super huge announcement coming in the next couple weeks that they've kind of put a little bug in our ear about. We're going to leave it alone there, but we're still going to do that. But we're going to put it off a couple weeks until they drop their announcement because it's going to be a game changer. This is going to be a big, it's going to be cool. So we're still going to do that, but we're going to do it after their announcement. In the meantime, still check them out, right? Like they're doing some cool stuff. Trade Anvil, check their Twitter out, their website, whatever. But they got some cool stuff coming. In the meantime, however, today we are going to get into, we're still going to kind of keep on our more recent theme of risk management because we feel that is the absolute most singular important thing you can possess in this game.
No doubt.
So, in conjunction with risk management, we're going to touch on some watch list creation. Not just watch list creation, but the importance of following your watch list, following your game plan. And there's reasons for that, right? Like you're the one that came up with it. You have all the justifications, you have all the reasoning, but it also, in my opinion, and I think this is often overlooked, but it can prevent FOMO, as we call it, right? You have your plan, I have my plan. You might trade things that I wouldn't look at and vice versa. But when other people get to talking about things in rooms and Twitter and whatever, it can create some massive FOMO.
Man, you know
But
I'm the world's worst about it.
dude, we can all do it. Like there's been numerous tickers all year long that if people talk about it, you want to jump on that train.
Mm-hmm.
But if you create a solid watch list and put in the work, follow your plan, your ideas, it can prevent you from jumping into trades from FOMO, which I don't know, 9 out of 10 times create a loss, at least in my world.
Yeah, mine too. Mine too.
So yeah, we just wanted to kind of touch on watch list creation and how so full transparency, we do it very different from one another, right? We were talking about that before we jumped on here.
Yep.
You do pen and paper, right?
Yeah, most
Ain't nothing wrong with that. Whatever works. You do pen and paper, then you have some long-term watch lists in your other programs that you use.
Mm-hmm.
And then me, I love Excel for all things data tracking, rules, watch lists, life. I love Excel. So I use Excel. But to each their own. But the important thing is we create a watch list, we create a game plan, and we follow that game plan. Sometimes you win, sometimes you lose. You follow it, or you try to follow it to avoid hopeful financial ruin, right?
Yeah, I've been there.
Yeah. I mean,
Financial ruin.
if we follow risk management, hopefully we don't have any financial ruin. But yeah, watch list. We've talked about this before. This is like the fifth time I've probably said this in the only few episodes we've done. But watch list, you trade, you journal. Like you got to do all three steps. You can't do one and not do the others. You got to create the watch list. You got to make the trades. You got to journal. We've talked about risk management. We will talk about journaling when Trade Anvil's done with their bomb drop that they're going to hit everybody with. And we'll talk about that when the time comes. But in the meantime, watch lists. So I'm going to share what I use every day to create watch lists. Like I said, I love Excel. I use it frequently. So I'm just going to show you guys what my watch list creation tool looks like. It's super simple. It's not groundbreaking. But it's this.
It does look good.
Right? Like, for anybody that uses Excel regularly or even semi-regularly, probably knows that this is a pretty simple tool. Creation, whatever. This wouldn't take somebody who's very familiar with Excel long to do it all. But for me, this is all I need. Right? Like, the reason I have it dated, and I've mentioned this to you already, when I journal, the first trade I make every day, I always take a screenshot of my watch list and post it with the day's trades. So I can always reflect back on the trades and the watch list.
You said you upload that with your trade. What is it? Your first trade, or
I always put it with the first trade of the day. That's just because in the journal tools, features, whatever journaling software you use, the first trade that you make on the day, if you search, today's the 27th. If you search your trades on the 27th or you're looking back or whatever, the first trade on the 27th, when I click it and it pulls up, this screenshot of my watch list will be in that first trade. And I can see, I can always know my watch list is going to be there. So that's why I date them, because I keep them. Some people would think that's silly, stupid, whatever. To each their own. I'm not saying you got to keep your watch list every day. It's just what I do. It's become habitual, whatever.
Hey, I've got all of mine from like the past year or so.
Yeah, but I mean, this is a really simple thing, but it's a thing that I think we probably undervalue or can be undervalued in the trading community. But again, super simple, right? I'm looking at ticker ABCD. Put it in there. The setup I'm looking at, I don't know. Let's just say it's the first red day. I want to short it. So I plan to get shorted $10. Your risk is going to be whatever your risk is going to be. Maybe I risk a break of 11 and I'm going for 3-1. So I'm looking for an exit at 7-ish. Again, whatever your risk may be. The news, if it's viable, if it's the first red day setup, maybe the news isn't viable. But if it's a day one play, it could be, there's 100 different things it could be. But one thing we wanted to touch on with news, or at least that I wanted to touch on with news.
Oh, yeah.
Some people, how to word this? Some people don't care about the news or pay attention to the news. I at least pay attention to it. And I have certain rules around it. I don't short cancer news. I just don't. I know some guys that don't even play with biotech stocks at all. Phase 1, phase 2, phase 3. I don't even fool with them. And I don't blame them for that because they can get really ridiculous.
I trade them all the time.
Yeah, and I mean, I will trade them too. I will trade biotechs, but I won't trade cancer news. Can be really tricky. And the reason I have a little news section is like I said, I like to try to interpret the news to some degree. And then notes, right? Whatever you want to put. And I think this boils down to your style of trading, what the setup might be. So for me, if it's a first red day, it had 6 green days in a row. I'm big with all things volume, so average daily volume be, I don't know, 1 mil. So if I see more than that and it's going down, great. If I see more than that's going up, whatever. You can put whatever notes you want to put in here. Whatever you like. That is relevant to your trading. And I think the singular most important part for me is you grade each in every setup. I grade ABC. That's just my style. I typically don't even trade my what I consider a C grade or whatever. A's and B's. This particular one, if it legit had cancer news, I'm gonna put like a C. Probably wouldn't even trade it. If the cancer news wasn't a thing and it was something like a recycled PR from 6 months ago, that'd be awesome. That'd be something that I'd grade like an A.
Oh yeah.
But
Yeah.
again, it's all about your style of trading, what your setups are, what your risk reward is on the given setup, what the news is. There's a ton of different ways to interpret this, but I guess the key point is you're going to interpret it to your style of trading. But I just think, regardless of what that is, you should prep, right? And there's a part of the reason I don't trade pre-market, kids aside, because I'm getting them to school and getting them ready or whatever. But I'm spending the pre-market doing this. Like I don't take a lot of. Very rarely do I ever trade pre-market. I never trade after hours. Very rarely do I trade pre-market. The volume's pretty low. The liquidity's low. Things can go nuts pre-market or after hours for no reason at all. I just don't do it. Again, to each their own. But part of the reason I don't trade pre-market is because I'm spending significant time creating this. And then I'll save it and I'll keep it on a screen so I can pull up and revisualize it if I need to. And I will take those entries and exits and I will draw those lines onto my charts. But I'm a big believer too, at least for me. This isn't for everybody, but for me, if I write something down, type it, whatever, I tend to remember it better.
I was gonna say that for me, like I have to write it down, like with a pen or pencil.
Yeah.
It just something about when I type it in on my phone or type it in here on the computer in like Evernote or something like that. It's just not the same to me. Like I've gotta have like a piece of paper and write something on it.
Which I don't think there's anything wrong with that. Like I really think whatever works for you or anybody, right? Like if it's writing it down, it's typing it. I have a whiteboard here beside me that sometimes I'll write some key levels on some things that I'm keeping an eye on or whatever. So you just have to do what works for you. But again, I think the most important thing is just creating this watch list. And some guys, I think some really, really disciplined people, I'm not going to say I'm one of them because I've had faults in this area before. We talked about this before we started this show, but so many times I've traded off my watch list and I'm going to say, 75 to 80% of the time I regret it. Right? Like,
Yeah, that's exactly what happened with me today.
and I'm not saying there's not a time and a place, right? Like midday parabolics. I love that setup. I will trade them. It's not something you can put on your watch list. What I'm talking about are, your day one plays, or if you're looking at multi-day runners or whatever the case may be, jumping into those things ahead of time can be disastrous, especially those multi-day runners if you're looking to short them. But again, I think that's where the watch list comes into play. It can help prevent FOMO. So I think this really does touch on our risk management stuff, right? Like we talked about risk management, position sizing, broker max loss, what percent to maybe use. I think this can kind of go hand in hand, with those things. You create your watch list, you follow your rules, you follow your risk management, you try to prevent yourself from getting on the ever terrible word of trading on tilt.
Yeah, man, Tilt should be my middle name because it happens to me. Um,
And I want to just show this too, because I'm going to let you tell everybody about your tilt story today, because it's we've all been there.
yeah,
But another thing I have in my same, so I have my watch list here, right? I'm going to take us off the screen so we can see it. But on the bottom left corner, you can create multiple tabs in Excel. Again, a lot of people probably know this, but I have my rules literally right next to my watch list. Like These are very simple. They're nothing out of the ordinary. But for me,
I like
this is,
that.
I mean, this is what I need.
I will not trade free market. I like that.
Yeah, and unless it's a gap down, right? Like I'll hit a gap down sometimes, a day two gap down pre-market, but even that's pretty rare because I'm getting my kids ready. So it's incredibly rare that I trade pre-market, really ever.
God,
Um,
I just hate like I always feel like I'm chasing when I trade a gap down.
yeah, well, I will say, and part of the reason I haven't traded pre-market this year at all is because the day two plays for me have just sucked. The edge has just not been there this year the way it has in the past.
I've
Um,
never been good with day twos.
well,
I'm
I've
only good at shorting like extension. I'm not good at shorting weakness.
oh, I don't disagree with you, and something I said it to when I did that interview with Laser.
Yeah.
I have found significant more edge on the long side on day two plays.
Oh, dude, you see me longing them all the time, man.
Yeah.
All the time. I mean, I pretty much only short into extension now.
Yeah,
I mean,
same. So really, that rule 10, I could take out everything that's not bolded in rule 10. But
but no,
yeah,
no, no. I agree with that. I didn't mean to.
no, you're right. Like, and but I haven't traded much at all pre-market this year for multiple reasons. Just not
I've
my
done a little
thing.
bit too much.
I just not my thing. But anyway, um, I just wanted to show this because it does kind of go hand in hand with the risk management piece. But I have these two things side by side in the same Excel sheet saved or whatever. So, yes, but we do these things to avoid trading on tilt because Mr. Sellers, tell him what happened.
You could be like me, and do like I did today, and be up like $1,200 in the morning, and then end the day down like $150, and then you've also paid for locates and whatever else, which I'm going long and short. But yeah, you know, I have a plan, and I trade the plan as close as I can to it, and then it's like it doesn't do exactly what I want it to do. So then it's like, oh, I just start
Pushing
smashing
buttons. Yep.
Yep. I should have just, man, if I would have walked at like our time, like 10:30 this morning, 11.
You'd be up a grand.
Yeah, I'd be up about a grand after fees and whatnot, and then I'm ending the day down $150, which is really going to be more like $200 or $300. You know,
yeah, after fees and yeah,
whatever
but
it is. I haven't even calculated it in yet.
probably don't want to. But
Nah,
this is we've talked about this too. Like, just imagine, right? $1,000 a day on average. We've said that out loud. Even 500, even $500 a day on average. We've said that out loud. It doesn't sound like a lot, but when you extrapolate that over the course of X amount of trading days in a given year, that is a lot of money.
what day job is going to pay you $500 to $1,000 a day?
Not a lot unless you're a CEO or a, I don't know, owner of a McDonald's or not a lot. Not a lot, especially without a boss, working from home, doing your own thing. Like, not a lot. And for you to lose 150 after being up 1,200, 1,000, whatever, obviously very frustrating. But you kept the loss manageable, right? Like,
Thankfully, and
yeah.
see that was another thing. Is last week, I don't remember if it was Wednesday or Thursday. I guess it was Wednesday. I hit my max loss. It was $1,000 on SINT, and I was up like $400 or $500 on it, and I just kept pushing for more. You know, I'm going long, I'm going short, I'm going long, I'm going short. I'm just like same thing, hitting buttons, and wind up right at the end of the day hitting my max loss. And with a little bit of slippage, it was like a couple dollars over $1,000 loss, and it pissed me off. But
Oh yeah, we talked about before we started the show today that it's easy. Realistically, it is easy to start trading on tilt. It's not hard to do. Easy to trade on tilt, but hard to walk away.
Yeah, and it'll make you sick
So
with
hard.
yourself, you know?
Yeah, you get trading on tilt, you can't walk away. Then at the end of the day, you're pissed off at your performance, at your decisions, at your P&L. You feel like a piece of crap. Like you
Exactly.
don't feel
Exactly.
good. Um, so the reason we've talked so much about risk management, now watch list creation, having that broker max loss set at a conservative level, especially for new traders or people trying to find consistency, is so you can prevent um, big losses,
Yeah,
right?
not 20-30%.
God, don't do that, man.
Not
Don't
saying any names. I'm just saying.
20, 30. You know what I think about that?
Right.
Don't do that. Especially if you're a new trader, somebody trying to find consistency. I think that's horrible advice. 20 to 30% max broker loss. You take 2 or 3 of those in a row, and as a new trader, you're out of the game. You're pretty much
Exactly.
done. It's no,
I mean, yeah, if you
no.
only have a couple $1,000s, man, I mean that.
Or let's say you've created your first big account, 30 grand, right? You got a brand new Cobra account, $30,000. You're feeling real good about yourself. You take 30% max losses in a row. Oh, you're hurt.
Hey,
You're hurting.
I've done that. I've been that guy.
And it sucks. Like, yeah. Okay. Anyway, yeah. Okay.
Yeah, it
Risk
does.
management.
It really sucks.
Anyway, yeah. So let me just put this up here one more time. All right. Watch list, super simple. It helps prevent FOMO. It'll help you stay on track. Because if you're in Discord room, if you're on Twitter, you're gonna see. I've seen in some Discord rooms or chat rooms. I've seen in some big chat rooms with thousands and thousands of members where the lead trader is calling out 30, 40 tickers a day. What do you think that does to people's mindsets, right? You're so freaking scrambled. You're probably trying to trade everything they're throwing out there, and you're probably losing time after time after time. Bad business.
I mean, even the commissions, man, it adds up.
Yeah. Like, so I think for me, I like to have, if I could have my watch list down to 4 or 5 key tickers, really, I'm happy as a clam if I can get it down to three solid tickers with 3 A setups, even a couple A's and a B. Like for me, that's a awesome watch list and really sets me up nice for the day. If I take losses on those tickers, but I followed my plan, I'm okay with that. That doesn't get me tilted. What gets me tilted is when I trade stuff not on my watch list. I'm FOMOing in, and then I'm making stupid decisions, and I'm in and out, in and out, in and out, in and out. It's just dumb. So this can prevent FOMO. Also, I was going to say, while I think this is a super simple setup, if there's anybody out there that wants this or needs help creating a watch list, let us know. We can get this to you. It would take me 2 seconds to click copy, paste, send. We're on Twitter. Hit us up. Leave a comment. Whatever. I have no problem sharing this out. This is not a groundbreaking thing. Super simple, but super effective.
Such a generous guy.
I try really hard. And it's the season of giving, Christmas. If I can give that to somebody for a Christmas present, I would feel like $1,000,000. So, do you have anything to add to watch list risk management, or what you got? Anything additional that I'm leaving off?
Just don't trade on tilt as hard as that is to do. And if you do trade on tilt, at least have that max loss set, because I mean, dude, there's so many times in the past 4 years, I had a 20, 30, or 25 to 30K account and wound up, running that account under PDT because I was on tilt. You know, I'd be
Yep.
like I've mentioned it before, like in that laser interview where I'd be up, a couple thousand in the morning. I'd be down 10 grand by lunch, and then I'd be back over PDT by the end of the day. But you can't do that. I mean, you shouldn't have done. I shouldn't have done that then, but you really can't do that now. You know,
No, it's been a crazy year, and the way the year is ending, um, Tesla, my God, Tesla.
I know, man. I'm
Um,
still trying to figure out what I'm gonna do.
I know, same. Apple, Tesla's at the top of my list right now. But anyway, we may see some amazing opportunities in 2023. I hope,
Oh,
I
yeah,
think,
I
which
think
is going to
so.
be all the more reason to keep risk management in check. Because if you want to catch the moves, you got to stay sustainable. You got to stay in the game.
You don't want to be the guy with no buying power when the moves come.
That's the worst.
I've been that guy.
The worst.
Thankful to not be that guy anymore.
Yeah, amen. All right, so let's well, Sellers did a thing this week.
Yep.
Last week
Yep.
we did we started the book recommendation because I love to read, love books, and Sellers was like, "Damn it, I'm gonna read a book, at least start one, and I'm gonna recommend something." And I was like, "Cool." So he did his thing, and let's jump into that. I already bought this, by the way. It's on order. I'm looking forward to it, but floor is yours.
Yeah, I hope you like it, man. I've enjoyed it. Uh, I won't say too much about it. Um, I will say I don't agree with everything in the book, but I think it is very it's a cool view on things, and it's different. And I enjoyed it. I really have to force myself to read. Um, now I've never been a big reader. Um, I wasn't ever even into listening to audiobooks, but you,
Which, to be honest, I guess a moment of truth here. I have never in my life listened to an audiobook.
man, you're just a hell of a
I've never
guy.
done it. I've never done it.
I'm so lazy. I'm a piece of crap.
Well, I like what you said though, because you said this to me when you first told me about this book, and you said it just now, and it's that you don't agree with everything, right?
Right.
Like I think that is so, I don't know, missed by a lot of people. Just because you read a book doesn't mean you have to like agree with everything or take it to heart or even think it's factual. Like I just love hearing about other perspectives. So I bought this because you said this kind of sheds some light on some very unique perspectives. So
It
I'm
does.
excited to read it. And sometimes I think it's good. I think there's a lot of good to be had sometimes. I think I'm all about balance, right? I don't think you I don't think it's healthy to go into all things trading 100% of the time, 24/7, 7 days. I think that's bad. So I think sometimes reading a book that's not about trading, this is still some, finance esque information, which is great, but it's not trading related entirely. So I think it's good to get a break from that on occasion.
Man, I totally agree because, like, you know, earlier last week was when I was starting on this book, and when I was reading it, I was killing it with my trading. And then it's like when I'm done with it, I'm just obsessed with the market. So I'm always looking, and it's like I don't have
Oh
anything
yeah.
else to put in my hands. So
It's tough to break away, but we all struggle with that. I struggle with that. You struggle. We all have. Fortunately, this month I've taken a longer break than a long time, but it's my whole December trading is essentially trading on tilt. Just with I know I've mentioned it before to you and on Twitter and whatever, but I just got a lot of stuff going on, so I have not been trading much. My December is probably going to end red, which it happens. It's part of it. I haven't. I think the last red month I had was March, if I remember right. But anyway, it's okay. We've had some killer three. You and I both, the last 3 or 4 months have massacred these markets, for lack of a better word. But
Oh, yeah.
December for me is not going to be pretty. And really, I'm not even trading any this week. I got family in town. We got a lot of stuff going on. Christmas for me lasts like a week, and I celebrate pretty hard every single night. So no trading for me in the near future. Looking to get into 2023 tough, but for now, I'm going to let my trading on tilt take a back seat until 2023.
Nothing wrong with that, man.
I am going to get this book. I'm hoping I get it this week and can have a chunk of it read before 2023 even gets here.
Yeah, I want to know what you think about it.
I'm going to let you know. So that is your book recommendation for the week.
That's right.
Watch list stuff done. Risk management 101, 102, 103. 1010, 2020, whatever you want to call those classes. Well, man, same as usual. To everybody out there, we're trying to get better at this, right? We want to do things that people enjoy. We enjoy doing this, but we want to do things other people enjoy or want to hear about. So same as normal, right? Like, let us know what you think. Let us know how much you love us. Let us know how much you hate us. Let us know what you want to be the next episode, or what you prefer we talk about, or whatever. Like, feedback is great. The more we get, the better we can be, etc., etc. Like, share, follow, all those things. We're on Twitter. You are
Sellers.
At Sellers Elkins, right?
Yeah,
Just
Sellers
your
Elkins. That's
boom.
it.
I am at Tatted Trader Guy. Obviously, we are trading unfiltered on here, but yeah, man, let us know anything, right? What you guys think, love, hate, wants to do, etc. Like, share, follow, all the good things. We enjoy doing this. We have no intention of stopping to do it. So hopefully we can get better at it in the meantime.
Oh, yeah.
Yeah, man, this is fun. I like it.
I do too.
This has been fun. And this is another good thing to break up the trading monotony. Right? We've talked about that, though. You can't win trading.
That's for me.
Yeah, you can't. You can't win trading. You can have a good day, or you can kill a month, have good P&L, but you can't beat the game. There's no real way to complete it. Whereas this, we've now completed another episode, and here we are.
Yep.
So with that, ladies and gentlemen, let us do this outro thing. Appreciate y'all watching. Until next time, peace.
Peace.
Back it up with this.